This video is aimed at smart individuals, so if you're not part of that group, I'd recommend you click off now. For the others, today we are going to answer the question, should I invest in MicroStrategy? My videos are not meant to be fun or entertaining, but to actually teach you something worth investing your time in. So if you're prepared, listen closely because you're about to acquire knowledge most people don't bother learning because they're lazy. This video is segmented into chapters, and in chapter 10 of this video I will tell you exactly what you should do based on your personal profile. So let's start. MicroStrategy, or Strategy as they rebranded, is a Bitcoin treasury company. Basically, their business model is to raise money to buy Bitcoin and repeat the process. Since they adopted this model in 2020, Strategy stock, MSTR, managed to beat the S&P 500 by insane margins on 4 out of 5 years. And I'm not kidding when I say insane. In 2020, MSTR beat the S&P by 154%, 9% in 2021, 390% in 2023, and 333% in 2024. This is a massive opportunity, but be careful, as this opportunity might not stay forever. At the end of this video, you will know the difference between all the MicroStrategy related products, how they work, and which one suits you best, so you can act on it and beat the S&P index. Now that we passed the intro, I can say with confidence that you are smarter than 50% of people who don't see the value in learning about finance. Congratulations, you may be smart, but the job is not done. Now it's time to see if you really are. In this video, I am going to walk you through 5 financial products. If you clicked on this video, I'd assume I don't have to explain what Bitcoin is or what drives its price up, so we will jump straight to the next step, which is MSTR. What is it? How does it work, and how can you profit from it? Alright, so MSTR is Strategy's common stock ticker, so it's through MSTR that you buy a piece of the company on the market. The performance of Strategy is reflected on MSTR, and Strategy has a well-oiled plan to make it perform as much as possible. MSTR's growth is dependent on Bitcoin's growth. Bitcoin's price action is the base layer of every product I am going to present in this video, and you're about to understand why. Strategy's plan is to raise money via debt or equity by issuing convertible bonds, preferred shares, or selling common stock to buy Bitcoin and increase their asset on their balance sheet. Because Bitcoins are bought with borrowed money, Strategy has a leverage position, so when Bitcoin's price goes up, the perceived value of Strategy thanks to their balance sheet makes MSTR's price rise even more. When MSTR's price rises, it then becomes easier for Strategy to raise money to buy even more Bitcoin because they get more credibility and capital becomes cheaper. Then the cycle repeats. They buy more Bitcoin, Bitcoin goes up, they raise more money, buy Bitcoin, etc. The company ends up with an ever more leveraged position. So basically, MSTR works thanks to a virtuous spiral. But the caveat is that the spiral can also go in the opposite direction. If Bitcoin only goes down in price, Strategy can't raise money as easily, which in turn makes them unable to increase their Bitcoin balance sheet. The leverage position would above all make MSTR plummet faster than Bitcoin. The strategy the company uses make their stock highly volatile. So if you want to invest in MSTR, you must have your heart well attached. You can essentially consider MSTR as a Bitcoin on steroids. If you do not believe in Bitcoin in the first place, investing in Strategy is definitely not the play. Let's discuss the risk now, because investing in MSTR is indeed riskier than investing in Bitcoin directly. Some people consider volatility as a risk factor. I don't. Simply for the reason that Bitcoin trades 24/7 and is highly liquid, so it's bound to fluctuate more due to its properties. Volatility doesn't mean permanent loss of capital, and that is the real risk. Let's not forget that even if Bitcoin and MSTR are closely linked, they are not the same thing. Bitcoin is decentralized code, while Strategy is centralized and directed by humans. So investing in MSTR means you take all the risk of a decentralized network, plus the risk that the company makes a mistake. Because Strategy is centralized, it also means the company has to be regulated, and that may complexify their operations. The last risk factor I want to address is related to Strategy's way of raising money. They issue new shares to increase their Bitcoin balance sheet and increase their shareholder value. Basically, they buy Bitcoin to give shareholders more Bitcoin per share. But when they issue too much shares, for example when Bitcoin's price is low, it dilutes the shareholder value of existing shares because more shares are created than Bitcoin is bought. To summarize this quickly, I would identify three major risk factors related to MSTR, and that would be management risk, regulation risk, and dilution risks. Alright, now that we saw MSTR, let's go a level deeper and talk about an option you might prefer if you like stability. If you made it this far, I'm highly confident this video is made for you. So let's talk about STRF and STRK. Those products are both issued by Strategy, which won't be the case for the last two products. STRF and STRK have some similarities but are not completely the same. Let's start with STRF. This product is a preferred stock, meaning it doesn't offer you the opportunity to profit from insane appreciation, but as a counterpart, it offers you a steady return of 10% a year, paid monthly. This is more of a product aimed at people who need a constant stream of income. STRF is issued by Strategy, but this product has nothing to do with Bitcoin. That is why, if Bitcoin goes to 1 million, STRF should stay at about the same price because there is no incentive for investors who want to catch a pump to allocate capital in this product. The yield is fixed and it doesn't change no matter Bitcoin's price or even MSTR's. Strategy proposes this product because it allows them to raise capital to buy Bitcoin without diluting the shareholder value of MSTR. Investors are paid with raised money or Strategy's cash flow, so as long as the company stays solvent, investors don't have to worry about defaults. STRF is meant to be stable but does have some risks you should be aware of. Because the yield is partially paid with raised money, then as we discussed for MSTR, if Bitcoin stops growing, it becomes harder for Strategy to raise capital as the company becomes less attractive and therefore there is no more money left to pay investors. The second risk factor is similar to the first one. The company pays dividends with cash flow, so if the company becomes insolvent, then dividends might be compromised. To quickly summarize the risk factor, remember that a slow Bitcoin growth is not good and that Strategy must keep some cash flow. Alright, so now that we saw STRF, it will be much easier to understand STRK. Your time is about to become even more valuable. STRK is basically the same as STRF, with a few different characteristics. STRK, just like STRF, offers you a steady stream of income, 8% annual yield paid monthly, but has the option to be converted into MSTR shares if MSTR reaches $1,000. The conversion ratio is 10:1, meaning with 1 STRK you get 10 MSTR shares worth $1,000 each or $10,000 combined. This product is designed for people who want to get steady income but also want to expose themselves to MSTR's potential upside. This product is in fact an in-between between MSTR, which is fully focused on upside potential, and STRF, which is fully focused on steady income. The purpose behind STRK is to raise capital with the deferred dilution on MSTR, as Strategy will only issue new MSTR shares if it hits $1,000. The yield is paid by the same system as STRF, which is through cash flow and raising capital. This means it carries the same risk factors as STRF. Bitcoin has to continue its growth and Strategy must keep some cash flow. Great, we covered every product issued by Strategy. Since you're still with me, I'd assume you're either gone or you're actually interested in investing in Strategy, so stick around. Now we are going to talk about IMST and MSTY. And right after, I will tell you of all the products I presented, which one you should invest in based on your personal profile. This part might be a bit complex, so let's see if you're part of the smart group who watch my educational videos. IMST is an ETF that aims at generating a consistent yield return, but it doesn't work like STRF or STRK since it's not issued by Strategy but by the asset manager Bitwise. Basically, IMST takes advantage of the volatility of MSTR by selling covered calls option on it. That means it's not trying to get rich from MSTR stock rising, but it's just collecting rent every time the stock gets volatile. To make things simple, Bitwise doesn't actually buy MSTR stock inside its ETF. Instead, they use synthetic tools to copy its price movement. Then, every month, they sell call options on those synthetic tools. That means they give someone else the right to buy MSTR at a certain price in the future, but in exchange, they get paid upfront. This upfront cash is called the option premium, and that's what becomes the monthly yield that investors get. The caveat to that is that if MSTR's price surges quickly, you don't benefit from it. With IMST, you're giving up the potential for big upside to harvest cash monthly. Note that the yield on IMST isn't fixed, it fluctuates based on the performance of the management. Now, what are the risks of this ETF? Well, because it operates on MSTR, it adds another layer of risk on top of the ones I described for STRF and STRK. There is a higher risk of bad management, since now we have two layers of management instead of one. So IMST is for people who understand MSTR is volatile thanks to its leveraged position, but don't want to bet on it and prefer steady income. Now let's compare IMST to MSTY to understand how the latter works. MSTY is another ETF that profits from MSTR's volatility, but this one is way more aggressive. MSTY is issued by YieldMax, another asset manager. While IMST goes for balanced yield, MSTY goes all in to get the highest yield possible. Just like IMST, MSTY doesn't hold MSTR stock, it issues synthetic positions and sells covered calls options on them. But unlike IMST, MSTY sells those options at a much tighter strike price, meaning it collects more premium each year, generating a higher yield, but give up all the upside. We finally got to the chapter I promised from the start. Which product should you choose based on your personal profile? First, you have to define what you are looking for while investing. Are you aiming for a big return? Or just a simple way of getting paid monthly? And what is your risk tolerance? High? Low? Once you answered those questions, you can choose between the options I am going to summarize now. Bitcoin. You go straight for the source. You believe in Bitcoin. You want no middleman. And you don't want to trust companies. You're okay with holding through crashes. And you're in this for the long term. MSTR. You want more than Bitcoin. You want leverage. You believe in strategy and you're not scared of volatility. You're fine with dilution, regulation and management risk because your eyes are on hypergrowth. STRF. You're not here for the insane upside. You want a predictable income stream. Paid monthly without having to worry about charts or cycle. You're okay missing the upside, your priority is getting paid. STRK. You like getting paid, but you also want a shot at getting the upside. STRK pays you 8% per year, but if MSTR hits $1,000, you convert and ride the upside. You're a long-term believer who still wants cash flow. IMST. You're not here to gamble. You don't want to hold MSTR, but you're smart enough to profit from its volatility. You're okay with giving up big gains in exchange for steady income as long as the ETF is well managed. MSTY. You want cash now. You're fine giving up all the long-term upside as long as you're getting huge monthly yield. You don't need to win the Bitcoin game, you just want to monetize volatility. You've just dissected MicroStrategy, Bitcoin leverage, covered call ETF, and preferred stock structure. So now you're already ahead of most so-called experts. But real conviction goes beyond product. It's about understanding the bigger picture. So subscribe to this channel to get more educational videos like these. This video took me a while to create, so I would appreciate if you liked it. If you are interested in watching more of my videos, I'd recommend this one, where you will learn how green development favors Bitcoin adoption.